We're looking at CTA2 and we're on the custom tab. So we have all this additional information on the side over here and then the inputs on the right side. And so we start out by calculating the predetermined overhead rate, and you're going to type that here, and remember that that is the estimated manufacturing overhead. So we have over here, the controller prepared the following budget. So this is our estimated manufacturing overhead. And we're going to divide that by the estimated cost driver. And we have direct labor costs of 145. And so that's what you're going to do here in O3. And then you're going to select these drop downs indicating if it's what percentage it is. Then, in requirement 2, you're going to compute the total costs for each job. So, direct materials cost are just given to you, and you can cell reference those. Direct labor costs, we have direct labor hours of 290, and we have a labor rate up here of 32. So we can do a cell reference of the number of hours and multiply it by the rate. And then we need to apply the manufacturing overhead based on this predetermined overhead rate. And so because predetermined overhead allocation is computed as a percentage of direct labor costs, whatever you have here, this is going to be a percent, you're going to multiply in the manufacturing overhead equal to our direct labor costs times the percentage that you've calculated here in O3. Now it's not going to give us anything because I don't have anything there, but let's just say that I had 80%. Oh, we don't need 2%. Then it's going to calculate 80% of direct labor costs. And that is what we want it to do because we're saying predetermined overhead allocation is computed as a percentage of direct labor costs. So that's how you will determine manufacturing overhead, and then we'll do a sum to add all of those together for the total costs. And then when you get all of these done, you can come down to requirement 3, where you're preparing journal entries for the jobs that were worked in Q1, and these in italics centered below each journal are the descriptions that are explaining to you what should be happening in the transaction. So we have purchased raw materials on account, and when we look over here in the additional information, we see raw materials purchased of 124,648, and so that's increasing our raw materials, so that's going to be a debit to raw materials inventory. And it's on account, so it's going to be an accounts payable. And then you can just cell reference the 124 from the additional information. And then you're just going to continue to do that through the rest of these journal entries. And then I will just caution you to remember that when we sell goods, there's two transactions that take place. One accounts for the sales revenue and the other accounts for it leaving inventory. So you need to, both of those will happen here where there's 4 cells and 4 cells. And then also just pay attention to the sales type, if it's credit or cash, when you get down to these sales accounts or transactions.